Well, Matt Maley is Chief Market Strategist at investment advisory firm Maley, Tabak & Co. Great to have you on the programme again. Look, it's tech's biggest earnings day. Did you get what you were looking for?
Well, not really. I mean, we got this kind of mix, with Meta getting hit so hard, and then of course Alphabet doing so well, and Microsoft, kind of in the middle there. And a lot of these stocks had seen big runs. They were getting overbought on a technical basis. So the fact that the overall market has pulled back a little bit, although it's bounced around a lot today, this pullback isn't a big surprise. It's kind of a buy the rumors, sell the news reaction. We'll see what happens with the earnings tonight. But from Apple and from Amazon. But overall, it's certainly not a disaster. Spending is still going to be very strong. So until we get a reading that, hey, the return on investment from all the spending is really going to be pushed out or not going to come, until we see that, these stocks, again, they could see a dip here over the next week or so, but I think, the momentum is too strong to ignore.
Let's talk about that spending, because a common thread with all these companies is massive spending on AI and on infrastructure, things like chips, electricity, data centers, and then how to power those. Big tech is under increasing pressure, isn't it, to show big returns?
They are, and they're just not there. And we've been hearing for almost 3 years now that about 6 months down the road we'll really start to see this. Well, now it's 3 years later, and they're still saying 6 months down the road. So at some point you do worry that this is going to become a problem, especially when you have some people starting to take on debt. I mean, Oracle is definitely taking on debt to pay for this spending, and then now we're hearing Meta, who announced a big bond deal today, so they could add a little bit of debt to their spending. So it's not quite the issue where, hey, it's all cash that they're spending right now. They're starting to go into debt to do it, and that's when you start to get worried.
Is it going to be a problem then, Matt? I mean, is an AI bubble forming that's about to burst?
Well, it's always hard to know when it's going to burst, but I definitely think it's a bubble. I mean, the question is, is it as big as it was in 2000? Well, probably not, but so what? I mean, just because it's not the biggest bubble in history doesn't mean that these stocks won't come down. I mean, if they're not going to get the return on investment that people are paying for right now, well, once that becomes evident, these stocks are going to have to come down. I mean, they are, most of them, not all of them, but like NVIDIA is still not the most expensive stock, but most of the rest of them are. And so they're going to have to come down with their valuations. So saying that it's not 2000 is saying, well, great. That means the NASDAQ's not going to go down 80% like it did back then. Doesn't mean it can't go down a lot, 30 or 40%. So we need to be very careful.
We certainly do. Matt Maley, great to speak to you. Matt Maley at Maley, Tabak & Co.